Do you reframe a bull market at a lower level than Dow 29,000, or do you frame out longer term where you're really not worried about 29 or 30 or even a higher statistic?
I'm really focused on the trajectory of this economy looking out over the next 6 months to a year, Tom. And the key thing for the stock market right now, because investors are doing the right thing, which is essentially writing off 2020 earnings, or at least the first 2 or 3 quarters of earnings this year. Earnings for the year probably will be down something like 25%. But what's very important for equity investors is the ability to see the light at the end of the tunnel, to have confidence that there will be an upturn in economic activity in the third quarter of this year, I think, at the latest. So sometime in the early fall, late summer, we need to start really seeing the economy get back into a more normal mode. And I think as long as we are continuing to do the right thing, which is following the advice of the scientists and the medical community with our shelter at home, with our social distancing, somewhat of a lockdown environment, as long as we're doing that sufficiently and do not reopen this economy too quickly against the advice of the medical community, then I think the investors will have confidence that we will have a sustainable recovery beginning this year, beginning at some point in the third quarter of this year. The big risk to this market, and the one thing that I think could send this market down to new lows, is a May 1 or premature opening of the economy. As much as there might be some people who thinks that would be great for the overall economy and great for the stock market, it would be a tremendous blunder. It would set us back horrendously, and Wall Street would not like it one bit, and they would let everyone know it right away. The market would tank. So Washington, if you're listening, please do not open this economy too quickly. Please follow the advice of the medical community and the scientists.